The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, to you up in the Northern Hemisphere. Nice to have you with us today. And good morning to our friends in the lands down under. For some of you, it's good afternoon because of daylight saving, of course. And New Zealand's 3 hours ahead of us. Melbourne's 1 hour ahead of us. And I'm at the Gold Coast in Queensland. And it's a beautiful day here. It's still summer. Pacific Ocean's very blue, looks great, and it's a lovely warm day. In fact, it's a bit more than warm, it's very warm, a bit different to where you folks are there. We're happy to have Jerry Winter with us here today. Jerry's our supporting broker. Good to have you with us, Jerry. Our friend Chase is with us. He'll growl at me for smoking. Craig, I'm going to ring you over the weekend anyway, mate. Catch up on all of that. Eric Trotter's with us from Dubai. Eric's had a bit of a health setback. He's coming good now. He's a long-time Danielcode member. Hugh Sinclair, Jan, Jay. Oh, my goodness, we've got a big roll-up today. Nice to have you all with us, folks. Terrific. Goodness me. Kieran O'Driscoll, our great friend. Kieran's an Irishman who's often been the funniest man in the room at the number of Danielcode tutorials he's been at. And great to have you with us, Kieran. It's good to see you with us, mate. I hope I'm going to see you soon. The next tutorial, incidentally, folks, is in El Segundo, Los Angeles, at the end of May, 24 to 27 May, at the Hilton Garden Inn. For those of you who are serious about being seriously good traders, let me know and I'll get you booked in. Mac Cutchins, hello Mac. Mac was going to come last year and he had a bit of a health scare. He's recovering now. Which is great. Nice to have you here. Matty Corbett, my mate in Melbourne. Goodness, they go on. Mike Midsos, our gun trader. Mr. Mike, wow. Hey, and Tony D. Dominica. Hello, Tony. Good to have you. You're coming to the tutorial, I know. Lots and lots of friends here. Good to see you all with us. Peter Andrews, my old mate in New Zealand. Gosh, look at them all. Nice to have you. Bruce Windsor's with us. Bruce is up in Canada. Did the tutorial by video. I hope you're going to come down to Los Angeles, Bruce, and we'll top you up and make sure you're roaring and raging. So is sound all right, everyone? No one's complaining. Terry Knight's on here. He's our IT guy. Terry, how's the sound for you guys? Everyone happy? Someone ding me on Skype if you would, or post or something. What have we got? Anything? Nothing. Where is everyone? Loud and clear, says Scott Corbin. Thank you, Scott. You're the quickest one on the keyboard. I don't know what's happened to the rest of you guys. Matt in Melbourne, can you hear me all right? Terry in Canada, can you hear me all right? Everyone else is good. Yeah, here they come now. Just a bit of delay getting through, yeah. Terrific. Okay, it's all good. We've got you. Folks, terrific to have you all with us, as usual. Sab in Adelaide. Hi, Sab. Sue Lee. Hello, Sue. We don't have many ladies. I love it when the ladies come along. Ah, dear, look at all our lovely Vicky Butterworth. There's another lady. Love you, Vicky. Nice to have you with us, Bill Ford. Okay, just so much to talk about, folks. I guess you must be going mad counting your money. I mean, the trading in the last month has just been absolutely extraordinary. We're right on top of it, and it's been great. However, I've talked to a few people in the last couple of weeks, and it's clear to me that some of you the basic building blocks are not there. So, you might not be getting as much out of this as you should be. And what I want to do, that's why I called it back to the beginning. Those of you who are of my vintage won't know why we have a picture of this little gremlin up there in our banner, but Terry Knight, our webmaster, my IT guy, he was right on it. He said, it's a film. Haven't you seen it? I said, no, I don't watch modern films very, very rarely, unless my children drag me off to one. But thanks for the banner, Terry, as normal. Terry does all of our banners. He did a great job for us. Thank you, mate. So I want to take you through the building blocks of trading the Danielcode, just the stuff from the website, not the advanced stuff that you learn at tutorials, just the very basics. Make sure you're getting a whole lot of money out of these trades because they have been absolutely sensational. And then I want to talk to you about the great corruption, the nonsense that's going on in our political systems everywhere. And I've really been fired up by what's happening in America with this great presidential campaign you're having over there, particularly the Republican candidates, who are just, really, no doubt, very different, and lots to talk about there. And of course, we have a general election coming up in Australia. No one's saying anything about it. It's supposed to be a secret, but there will be a general election, probably August, September. And given what's happening in UK with the Brexit argument, which is, journo slang for British exit from the Eurozone, they're actually having a referendum over there. They're actually going to let the people vote on what they want, which is the rarest thing in politics. Politicians really don't allow referendums. They're not really that interested in the will of the people. In fact, they're not interested at all. But if UK votes to leave the EU, you could see David Cameron, the present Prime Minister, in trouble, and you could see a change of Prime Minister in UK. For Americans are often a bit sceptical, don't quite understand how we can change our leaders in countries like Britain and Australia. We follow what's called the Westminster system, and that's, of course, where the House of Commons in London is. All us previous colonial powers have much the same sort of follow nurse and set up your political system that way. And our Prime Minister, we don't have presidents, we have a Prime Minister who is described as the first amongst equals, but basically our leader is chosen by the parliamentary party, not by the people. We don't have a vote for our Prime Minister, we vote for our representatives to go to Parliament, and then they vote for the leader. So when the parliamentary party starts losing faith in their leader, which is code for they think they're going to lose their seats at the next election, they switch in a new one. So it's a lot easier. You can't, no comparison to what happens in the States, of course. But anyway, let's go on and have a look at a few things here before we get involved in the politics of the world. And I just want to remind you, folks, of this big blue line buy signal in oil back a couple of weeks now. And I see, of course, it's very much known now as the Jamie Dimon low. Jamie's the boss of JP Morgan in the States, and he reputedly bought, I think it was $26 million of his own company's stock on the same day that the blue line buy in oil that we had went off. And I don't know why it's called the Jamie Dimon low. He didn't tell you he was going to buy that stock. He bought it and didn't tell you till afterwards when the rally had started, whereas we told you to have blue line buy signals in oil and the S&P, and TO3 buy signals also in the S&P, NASDAQ, DAX, Russell, and a sell in T-bond all on the same day around that weekend. Was absolutely fantastic. So this might be, excuse me, might be better called the Danielcode low rather than Jamie Dimon low. At least we told you beforehand. Not much good telling you afterwards, which seems to be most of what you get out from the press. This is our compliance statement. We're required to show you this. I'd like you to understand that there is a real risk of trading in securities in futures and Forex. And if you don't know how to trade, there's a huge risk. So for those of you who do want to trade, for goodness sakes, make sure you're trading safely. Learn as much as you can from the Danielcode website, and then come along to a tutorial and we'll teach you how to be a really powerful, safe and profitable trader. We have, as always, some new members with us today that we don't really know terribly well, but I thank you for coming along to this webinar. And if you're interested in the Danielcode, we don't do any marketing or sales pitch. We simply say that you can have a free trial of everything we have to offer at the website for 31 days, and you can see for yourself whether it's going to suit you. I mean, reality is that, different people have very different requirements, and what suits one person may not suit another person. So simplest way is to say you have a look and see, and you make up your own minds what, if any, of the stuff we do will be suitable for you. That way it's entirely up to you. If you are interested in a free trial, there's a banner at the Danielcode website. You simply click on it, create a username and password, and just email your username to Terry at support@thedanielcode.com. And he will turn on everything for you for a 31-day free trial. And if you have not yet got Trade Navigator and you would like to have a trial of Trade Navigator as well, Terry can arrange that for you also. Okay, so let's move on. We can get rid of this now, and we can have a look. Here's this blue line trade for oil back on the 11th of this month. And you can see that all of these requirements were in place. Our fast stochastic, these are our basic Danielcode tools that you get with the Danielcode library, it's called. Trade Navigator group studies together and call them a library. Ours is called the Danielcode library. And there's a whole host of Danielcode tools in there that you're welcome to have if you're a subscriber to the TO3 Plus signals with us. And you can see here we have a fast and a slow stochastic, and we have a momentum, a proprietary momentum indicator. So we had the slow stochastic oversold, the fast stochastic oversold, and the CCI, our momentum indicator, was showing divergence. You see here this market made a new low for the move, and down here the CCI momentum indicator did not make a new low. That's called divergence. Now this chart isn't quite right, because right here we've got this little letter R in a triangle, which tells us that we had contract rollover there. So in fact this is the continuous chart, which includes the March contract and the April contract. But I wanted to show you what triggered this blue line buy signal is actually not target recognition down here. This last bar is quite floppy in terms of finding the Danielcode blue line, but it's this bar way back here on Tuesday that gave us the target recognition. It had a low of 27.74 against the Danielcode number of 27.68, so just 6 ticks variance there. And that's what started the sequence that the market was doing its target recognition of the Danielcode blue lines. At that stage, you can see this was not oversold, but the next day it was, which is why we issued this blue line buy signal for the Thursday, which was elected on the Friday. Just had a comment from a client during the week to say, how do I tie in the trading the signals from the fourth seal? Now, the fourth seal and the fifth seal are both created from long-term charts. They're created from the 6-day charts, the 12-day charts, and sometimes even the 24-day charts. And we use those for our timing charts. And on those charts, we create timing signals where markets will mature the various Danielcode time cycles. And we look at a combination of time and price. And in our fourth seal studies, we're able to forecast future turning points, days, weeks, sometimes months in advance. And Panos asked for an example of how we put together the fourth seal signals and our actual daily chart signals. You can't trade from the 6-day charts. The risk on those 6-day bars is so big, it's way outside your risk parameters. So what we're doing basically is we're looking for our longer term charts and our timing charts to set us up for a important turn. And then when we have that, then we go to the daily charts and we wait for a daily signal to be elected and to pull us into the trade. Now, what do I mean by elected? We work off daily bars for most of our trading, which means that there's the signal for Thursday. This is February the 11th, if any of you are looking at your own charts later. And we had a buy signal. Now, for that trade to be elected, it has to trade above the true high of the setup bar. That high is 27.48. We allow a 2-tick buffer for futures, a 5-tick buffer for Forex, and that's because everyone gets the same data for futures. We know with a high degree of certainty what those prices are. But in Forex, because there are so many different platforms, there's no central exchange, we use a 5-tick buffer because the prices are not quite as reliable. So here's our setup bar with the high of 27.48. And so we are going to buy at 27.50, 2 ticks above that high. Now, better than 40% of these Danielcode signals are never elected. So for goodness sakes, don't try and start trading them until they are elected. I spoke to a chap the other day who we had a sell on a particular market. I forget what it was. The trade was not elected, but he was trying to go short. And if the trade is not elected, it means the previous trend in place will continue. So up here as an example, just to give you a silly example, we didn't, but we could have had a buy signal on this day, the Monday, in which case it meant nothing until it was elected. It would have to trade here 2 ticks above Monday's high. So don't be trying to buy it until it's elected, because if it's not elected, there's no turn and the market will continue in its original trend. So here we had to buy this market at 27.50. We bought it, off it goes. Because it's a blue line buy, there are different types of signals and they're valid for different periods and they should be handled differently. I'm going to go through all of that for you today. That's what I'm talking about with back to the beginning. Excuse me. Blue line trades are valid for 3 days, including the day of posting. TO3 trades are valid for 2 days, including the day of posting, and daily trades are valid only for the day of posting. And with the blue line trades, they're the ones we encourage you to hold them with a trailing stop. And what we do is we use this stochastic here. This is the 533 or the Danielcode fast stochastic. And we suggest to you that you should use a 2-bar trailing stop until this stochastic gets overbought, which it does up here. Now, bear in mind there's a contract rollover here. This is not exactly the right chart. We've got the 2016-04 chart in the rollover, but there's also the 03 chart before it. There's a slight difference. I can tell you that on this Wednesday, the market, the stochastic became overbought, which means you go to a 1-bar trailing stop, and that means your stop's up underneath this bar on the 18th of February and eventually you get stopped out. With this 2-bar trailing stop, that's the lowest low, your stop's below the lowest low of the last 2 completed bars. So this counter trend bar here does not stop you out because here's the bar before it is 1. When this is finished, before this is finished, for this day that's trading, on the trading day, I should say, of February the 16th, the trading stop 1, 2, it's below the true low of this bar here, which is way down at the close of the previous bar because of this gap. Okay, when we have a gap, we have to account for that gap. This market moved overnight, and we have to account for that gap. So this counter trend bar didn't affect us, and then as this stochastic moves up and gets into overbought position, which I know it's not quite showing on this chart, but take it from me, it did. You then go to a 1-bar stop and you finish up getting stopped out at the low of this bar. And approximately, bearing in mind there's a rollover in here, that trade was worth almost $5,000 per 1 contract. So, I mean, as I say, trading's been fantastic. The S&P did much the same, so did the NASDAQ, the DAX, the Russell, and we had a nice sell in T-bonds at the same time. Was pretty sensational. I want to just go through with you these basics, but let me just finish this item on oil. How do you meld together the 4th and 5th seal signals with the daily signals? Well, let's have a look at that. And to do that, we can go and have a look at the Danielcode trading program. This is the Danielcode website, which normally will look like this. We have various things that I hope interest you on the front page. And then inside here, most importantly, once you've logged in, you'll get to see all of these extra headings that you don't see normally, including you'll see the members charts. Here's the members chart of oil coming up now. As you can see, there it is. This was the low. This is now into the April contract, and all those charts are there. And down here is a list of the markets in which we run the fourth and fifth seal analysis. It's quite extraordinary. Let's have a look. We do DAX, S&P, crude, natural gas, copper, T-bonds, the US dollar index, DX, and gold. Let's have a look at crude oil. You can see that what we have here is this is a 6-day chart. Frank, who helps me with creating these charts, very clever young man, never saw Frank DB never saw a chart until he came to a Danielcode tutorial in December 2011 in Taupo, and he got particularly interested in the forecasting. These are fourth seal lines down here that show you time and price. These numbers under here, 59, 44, 62, these are the major Danielcode time cycles, and these other numbers, the reds and blacks, are retracement numbers on the charts. Frank got terribly interested in the fourth seal. It's the most amazing forecasting method that I've ever seen, and he helps me now create and maintain these charts. Frank is Belgian, gentlemen. English is not his first language, and we used to go to a lot of trouble to correct his spelling errors and what have you, until I thought that was rather presumptuous. He does a great job with his language, so we just leave things as he wants to put them in. You can see from last week down here we had a 59. A few weeks past, it ran up into a 59.62, then came down. We had time and price at this low here, and we had a 44 cycle and a 62 time cycle. 62 is particularly important. It generally gives you highs. It can invert. It did invert up here and gave you a high, but normally I've misstated. 62s tend to give you lows, and we had a 62 cycle there. And what he said last week, we expected the 62.44 cluster cycle low of last week to induce another swing low in crude, and so far that is happening on schedule. This cycle runs until this Monday, should have given us the swing low for the move. We don't know how high crude could go, but odds are the market goes higher until the next 44.62 cluster cycle high 2 DC weeks from now. Follow the DC trading rules to handle trade setups. And a DC week is 6 trading days. That's what he's talking about. So that's what you had from the fourth seal. You were aware that there was a time cycle coming up. You were aware there was price support as well as time. And that meant it was time to go and look particularly for a daily signal on the Danielcode daily charts. And that's what this was here. There was the blue line signal. It's in accordance with what's happening in the fourth seal, but we've gone from a 6-day chart now down to a daily chart. So Panos and others who are confused about this, that's what he means by saying follow the DC trade signals. You have the setup from the 6-day, perhaps the 12-day chart, then you go and pay particular attention to the daily trade signals, and they are organized to let you execute your trades and to manage your risk, etc. Now, let's move from here back to our Danielcode website, and what happens here is that every day I post the trading signals for you. They come in 2 groups. There's the TO3 signals, which are in this box here, and they tell you what the new signals are for today. Remember, these are only the new signals, and this box here If you're subscribed to the TO3 and Plus signals, these tell you the additional signals that come in the TO3 and Plus signals. They're all turn signals, but the Plus signals include blue line trades and the daily trades. Now, this is only the start of it. From here, you go to this tab here called Trade Program. This is the Danielcode Trade Program, and it brings up this page to the website. Down here, it tells you how to handle your trade. The trades are designated as R for reversal, C for continuation, and 3 for the threes trade. And these are the suggested stop loss and exit protocols, and they're different for each of them. Now, this is not binding, folks. The Danielcode website is optimized for safety. We have a lot of people who are new to trading, so all of this is optimized for safety. Once you get good at trading, you're more confident, you don't have to be bound by these rules. And the one that causes the most contention is the R or reverse trades. We have a fairly narrow window in which we suggest once the market gets to that number, if the trade is elected, you move your stop to break even. And what happens very often is the market will let you get your stop to break even. It'll then come out and down and stop you out and then take off and give you a great trade that you're not in. And people get annoyed and upset about that. You don't have to follow these protocols. If you're comfortable with your own trading, if you're a little bit more advanced, you just do your own thing. And what this does here, you can put in here your account value, whatever it is, you can put in your risk value. I recommend 2% is enough for people who are starting to trade. You can certainly open that up when you get better at it, and then you just click the calculate button, and this is what happens. You get this document here in the website that not only has all of today's trades in it, it has also carried forward any trades that are still valid that have not expired. So, example, we could have had a blue line trade yesterday or 2 days ago. We could have had a TO3 trade yesterday. If those trades are not elected, they're still valid for execution today. For me, incidentally, so you're less confused, today is Friday down under. For you, it's Thursday night. But these signals go up about 3 hours after the US markets have closed. They're posted about 3 hours after the markets close. But the trade program carries forward any signals that are valid and have not been elected. So there are markets here, there are signals here that are not in the TO3 plus signals for today, but they carried forward from yesterday or perhaps the day before if they were not elected. And all you do in here, it tells you, makes suggestions as to how many contracts you can take. You can type in here how many contracts you want to take, and then you can just ask it to calculate this total value sold. It'll whiz around up there in Denver, and it will come up and it'll tell you what's your risk on entry. Now for the risk on entry for this CAD Chief, $151 if the entry is taken at this point, 71.92, and your stop goes at this point, your initial stop, 7.332. And then down the bottom, it adds it all up. And you should be risking about 2% per market. In addition to that, you can see all these yeses and nos down here. The website knows whether these trades are correlated or not. Let's have a look at this over here, make it really simple. Here's a Euro USD trade. Here's a GBP USD, a USD CAD, and a USD Japanese yen. All of those trades have the component of the US dollar in them on one side or the other, which means to some extent you're trading partly the same market. If the dollar strengthens, then all of those markets will be affected the same way. And that means that those markets are correlated. And the trade program knows that, and it cuts down the suggested number of contracts you should take to reflect the fact that they are correlated. So we have the same thing with the equities. You can see down here, NASDAQ, S&P, they're highly correlated. Typically, if one goes up, the other will go up. The quantum is different, but the directional movement of equities is almost always the same. And the four US equities, Dow, Russell, S&P, and NASDAQ, and the German DAX are so highly correlated that you can take a signal from any one of them and execute it in any other. So, for example, we have a sell signal in the S&P today. If you wanted to, you can execute that in the Dow or the Russell. In the same way we have a signal in the NASDAQ, the same thing applies. These markets are very highly correlated, and we have the same correlations between silver, gold, and Huey as between those three groups. A signal in any of silver, gold, and the Huey, which is an index, it's the unhedged gold miners index, can be executed in any other group. So if you have a signal in silver, which has quite a big margin, you can execute it in gold. If you have a signal in the Huey, you can execute it in gold if the trade is elected. Remember, the trade must be elected. And then you can manage your stops as you go. Excuse me. Now, they tell you how to do it. Remember, the blue line trades are all C trades, okay? They're the ones that you're going to try and hold. You can read through these things here. You don't have to use any of these suggestions. A lot of you, I know, have your own ideas about handling stops. But for those of you that are new to trading or not fully confident, you can follow this program with a high degree of confidence. It worked very, very well for many years. Okay, so let's have a look at some more sophisticated nuances of this. And what I'm going to do is show you a number of charts. Let's start with let's start with the big trade of this week, shall we? This is the sugar chart, and we had a blue line buy in sugar. I'm going to have to bring this up on the other computer so I can talk to you intelligently about it while it's happening. Now, we had a problem with this trade with one of our clients. Let me just bear with me while I bring this up. And this is going to be SB2 is sugar, and we're in the May contract. So right here on this bar here, which was Friday, February the 19th, we had a down bar. The low of that bar was 1261. You can see the blue line was at 1263. That's target recognition. That's very close. That's close enough to give us target recognition. We had the fast stochastic had reached the oversold position. The slow stochastic had reached the oversold position. And we had divergence on the CCI. The market made a new low. The CCI did not. Okay, that's divergence. So that blue line signal was for execution the next day. It was to be executed 2 ticks above the setup bar. The Friday bar had the setup at 1987. So we wanted to buy this day, which is the Monday, at 1989. And the high of that bar was 1989. So if you put an order to buy on stop, what happens with stop orders is that when that price in the market has been reached, your market then becomes a market order. So you will get filled some minutes after the market has hit that level, depending on where you rank in the queue. Electronic orders are queued based on the time you place them. That's the theory, at least. I know that in reality there's a lot of other things that happen as well, but nothing that will affect you. And it's that 1989 was the high. Once it traded to that number, that was the number we said to buy at, your stop order became a market order, and you would have got filled some distance away from that high, so you got positive slippage. You got in a bit better than 1989. So we look at what's happening here. This is defined as a blue line trade, so that means we're going to try and hold it until the stochastic gets overbought, which it's done up here. And if you were really brave, you bought this on the Monday. It didn't look great, did it, on Monday night, but that often happens in trading. And Tuesday we had this incredible 9% bar, the biggest bar I can find on this chart. And we had all of these pathetic excuses from the hedge fund managers and commodity traders that, oh, nobody saw this coming, complete accident, and was due to the International Sugar Association redefining the size of the year's crop. Everyone thought it was going to be plentiful, and it turned out to be going to be short, going to be a deficit, which is what caused this bar. In other words, after this bar was over, okay, now this big bar, this 9% bar here, this is Monday. We posted this signal to buy. The blue line for sugar was posted before the markets opened on Monday. Okay, and that's this bar back here. In fact, we posted this signal on Friday night before the markets opened on Monday. We're not waiting for what the International Federation of Sugar People has to say. We're not even interested in news. What we're talking about is what the charts tell us. I've got a question here from Steve. Did you mean 1289? Yes, I did, Steve. If I said something else, I apologize. The setup bar here, this is the setup bar, has a high of 1287, which means we're buying at 1289 the next day. And here's the next day. I'll put the arrow on it now. And this next day was Monday, February the 22nd, and the high of that bar was 1289. Okay, and that's where you bought. And then it didn't look too good that night, but you were long. And then the next day we had this incredible 9% boost with the market going nuts. If you wanted to get out at the close of this bar, that's quite valid. I always teach that if you get these massive gifts from the market, it's quite valid to simply say thank you and take your money. If you persevered with it being the blue line trade, then you had a 2-bar trailing stop. You still had a 2-bar trailing stop. And after today, you now have a 1-bar trailing stop, which means your stop loss is below the low of Thursday's bar, which is at 1371. So your stop loss will be at 1369. Of course, the risk you face with that is we have now found almost perfect target recognition of the next set of Danielcode blue lines on the upside. Fast stochastic is overbought, slow stochastic is overbought, and look at this divergence on the CCI. Market has made a new high, the momentum indicator has not, that is divergence. That creates a sell signal for today in sugar. Okay, so that's that example. I've got a few others I wanted to show you. A lot of these are going to be currencies. Here is Euro JPY. This was a blue line buy posted for Wednesday. Let me just bring up the chart on my other computer. And I can tell you that there we are, this big bar. This is Wednesday's bar right here. This one down here, same thing. Fast stochastic oversold, slow stochastic oversold. Divergence on the CCI. The market made a new low. The CCI momentum indicator did not. In fact, it's gone up, and that led us to issue the buy signal for this market, which was, in fact, a blue line buy signal, which means if you want to, you can hold it using this stochastic as a trading stop, but you don't have to. If you want to exit first profitable close, you can. Fine. You'll see what it's done. It's run up straight into this now. So you bought. This is a forex contract. So you bought 5 ticks above the setup bar. The high of that was 123.618. So you bought 5 ticks above that, and you put your stop 5 ticks below it. And the trade program gives you the exact numbers. You don't have to calculate this stuff. We do it all for you. And off it went. So there's a nice buy for you today. The next one I wanted to show you, that's Euro JPY. Let me close him and him so I can find the next one for you. CAD JPY. Norbert's looking for CAD something. Let me see if I can read that, Norbert. Just bear with me, folks. USD CAD. I don't know if it's one I have up here. Let me have a look here. USD CAD. I don't have it here, but I can bring it up. Norbert, one of the things is I really urge you is to diversify your trading. I know people get markets that they're particularly interested in. I know Norbert's in Canada, and that he's interested in the Canadian dollar because it affects him economically. We're all interested in that sort of thing, but for goodness sakes, don't trade markets because you have an interest in them. Don't say, everyone says, I'm going to trade the S&P, E-mini, and gold. Look, folks, let me assure you, they're not the best trading markets. They're okay most of the time. Sometimes they're very good, but they're not the best trading markets. What you should be doing is having a portfolio approach. Trade as many markets as you can. Now, I know that's governed by your risk management, how big your account is, what margin you can afford, and what risk you can afford. We had a whole lot of people week before last. That day, the Jamie Dimon low should be called the John Needham low. We had these buys in S&P, NASDAQ, Russell, DAX, sell T-bonds, buy crude oil. A lot of people couldn't take all those trades. Understand that. You need a decent size account because of the margin on all of those and the risk as well. You can, if you want to, use a dollar trailing stop. Okay, I suggest that the only true support and resistance is markets that you will ever see are daily highs and lows and the Danielcode numbers. But you can use a Danielcode retracement of the setup bar to manage your stop. You can use a trailing dollar stop. You can even use a fixed dollar stop. There are many ways to manage your risk. Let's have a look at this one here that I wanted to show you. This is Canadian dollar JPY. Norbert, this might be of some interest to you, and I'm showing you this because this was a daily buy signal today. Okay, pretty simple. We saw it. We don't read these daily signals. Don't come from these studies. They come from something a bit faster. Yeah, the key reversal bar here, right at the Danielcode number, 83.98. CAD JPY. The low for that bar, we were looking for 80.398. The low came at 80.364. Close enough for target recognition. So that became a daily buy signal. You bought 2 ticks above this high, and because it's a daily signal, exit the first profitable close. And that gave you a nice little bite today of about, let me see, $1,400 per one contract. And all of these add up, folks, and they just go on and on and on, as you will see. We have had so many winning trades. We're getting like Donald now. We're winning, winning, winning. I love it. Yes, it's great. You should be too. This is the British pound, Japanese yen. This was a TO3 buy signal today. And I just want to show you something this market does sometime. If you look at this bar here, which is going to be Wednesday's bar, you can see that you've got almost perfect target recognition at the close. So target recognition of these Danielcode numbers can come at either the bar high low or on the close. This is the latter case. This is target recognition on the close, we had a blue line at 156.291. The close of this bar was 156.195. It's this easy to see the stochastics, easy to see the divergence, but none of this is going to work for you unless you know the Danielcode numbers, which is why I spent half the week creating these members charts for you. All of these charts are in the Danielcode website. And for those markets that I don't publish charts for, I've got the charts anyway, and I'm creating the signals for you. Okay, but the key to this is the numbers. Without the Danielcode numbers, none of this other stuff means anything. That's the big difference with the Danielcode numbers. So this was a, this is GBP-JPY. This is a TO3 buy signal. Exit first profitable close here, made a few bucks, but have a look where this stochastic is. This could have a lot of upside in it, this trade. Okay, so if you want to hold this with a trailing stop, you can. Okay, this is not school. You don't have to listen to my suggestions. They're there. There are options. You can exercise your own judgment. But whatever you do, be consistent. Okay, if you decide to say every time this stochastic, well, in this case, both the stochastics are well oversold. Well oversold. This could well have been a blue line trade, in fact. If you want to treat it as a blue line trade and use a trailing stop, a 2-bar stop into a 1-bar stop, you can. It's perfectly valid. Go ahead. There might be some big upside in this. Okay. Okay. Eric can't hear us. Let me just send Eric a message. Bear with me, folks. Okay, I'm just sending Eric a tweet. He's lost sound up there. He's in Dubai. Gosh, you know, we've had internet. I've got, you know, as you can imagine, the highest spec broadband internet. You can get cable internet, I think most of you guys call it. It was off for 2 or 3 hours yesterday. The day before it was on and off all day. You ring your internet provider. They don't even know that they've got a problem. They don't even know that you've got a fault anywhere. Let's see. So, you know, you've just got to be patient. Yes, everyone else has still got sound. Thank you, Terry. I think that's just a problem for Eric. He's in Dubai, and he may have had a problem somewhere else. Okay, let's move on. That was a GBP-JPY. The next one I want to show you is dollar yen. Why am I showing you this stuff? I'm trying to get you to understand the basics of this stuff. It's all the same. Here was for dollar yen, we had, what have we got here? Let me see, dollar yen. We had a TO3 buy signal for today. Here's the bar, key reversal bar. Key reversal bar is a bar definition. It opens within the range of the previous bar. It makes a new low for the move. It closes above its open and above the previous bar's close. Sometimes these key reversal bars are directional indicators. There's another one up there. That's a key reversal sell. This is a KRB buy. Look at the position of the stochastics. No real divergence here, pretty flat, but the TO3 signals have other measures of divergence they look at, and there was enough there to say that this was a TO3 buy for today. And this is, let's have a look, USD-JPY, where are you? USD-JPY. If you wonder why I'm mumbling, folks, I'm trying to look at this on another computer at the same time. I have these charts on a separate computer, and this little trade here, $673. Wasn't much. You didn't have to do anything either. You just had to put your order on, put your stop on, count the money. Do we think it's going higher? I don't know, and I don't really care, but what I can tell you, there's a really good argument to hold this trade with a trailing stop. Look where the stochastics are. They're both oversold. This should have more upside in it. You can move your stop to break even if you like, or you can just use your trailing stop and follow the protocols. Either is good. So that's what I want to show you today, folks. I want to make sure you're aware that what we give you here, we tell you what the market is, whether it's a buy or a sell, the entry place, the place to put your stop. We give you a calculator here. You can calculate your trades. You can change these if you want to. Let's change that. Let's put in a futures contract as well in corn. Press the button again, calculate total value. It'll whiz around wherever it is in its server, and it'll come up with new numbers. And here you are. You can see it's now telling you if you went to 2, your risk on this market is 450. If you trade one contract in oil, your risk is $375. Okay, so you might say, well, I want to take a bit more than that. You can change that, make it 3. Calculate total value. Everything you need to trade is here. Okay, this will spin around in a moment if I press the right button. Bear with me as it calculates. And here it is. If you take 3, your risk on entry is $1,125. And it adds them all up. And it tells you what the margin you require for that is. Now, bear in mind, these margins are not perfectly accurate. They're not updated all the time. They're just an indication to you. You should check margins yourself at the CME website or the NYMEX website or contact your broker who are right on top of these things all the time. Okay, so they're the 3 sorts of trades that we're giving you in the Danielcode trading packages. Daily trades, TO3 trades, blue line trades. Just follow this simple procedure. It's all set out for you. Put your entry on stop where this program tells you to put it. Put your stop loss. It's an if done stop. Don't put your stop loss on otherwise, if the market doesn't turn, remember, better than 40% of these trades are never elected. So don't put your stop on and get your stop elected before your entry is elected. Put your entry order on stop, and then you have what's called an if done stop loss. So your trade has to be elected. You have to be in the market the way the signals told you to be before the stop loss excuse me, becomes active. I had one other point I wanted to show you, and I had a chart for it which has disappeared. Just bear with me and I'll see if I can find it again. I suspect it was corn. Let me see if I can find the corn chart. I had something very specific to show you, and here it is. Okay, now you can see the corn chart. Just let me make sure this has changed and you're looking at it. Yes, you are. And what I want to show you was here. Okay, this is, let me get the master chart up. This is a very, very important chart. It will help your trading a great deal, folks. This is Monday, February the 22nd. And for this day, for Monday, let me see if we did or didn't here. Nothing there. Nifty, sugar, NASDAQ, Monday 22nd. DAX, soybean, T1, sugar, blah, 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 blah. Nothing. Tuesday. Tuesday, this day here, we had a nice sell, very nice sell in oil, and it was a TO3 sell, and it got triggered. A couple of points to look at here. It got triggered at the true low. You can see in here this little green tab at the bottom. That tells you there's a gap, and the low of this bar is not what you see in black. The low of this bar is the previous day's close, because we must account for that gap. We call that the true low as opposed to the chart low. We had a nice TO3 sell on that day. But look what we ran into the next day. This is contract rollover. The point I want to make to you is Trade Navigator and most charting programs will put on a little icon. This one's R for rollover in a little diamond. They'll put on an icon to tell you when they estimate the rollover is going to happen. Rollover actually happens when the volume in the next month becomes greater than the volume in the present month. What we call the volume in the far month becomes greater than the volume in the front month or the near month. And that's what causes the rollover. But probably better than 98, 99% of the time, these rollovers happen on historical dates. They're very, very accurate. 2 years ago, we had a big aberration in the equities, S&P, E-mini, the Russell, NASDAQ. They were rolling over 6 and 7 and 8 days later than historically they did. And I haven't really heard a reason why that was, but they've all come back now to act very much on their rollover date. So when you have contract rollover, it doesn't immediately affect you as a trader. What it means is a broker will not allow you to open a new position in the old contract. Okay, so here we had this contract here that we were trading up to this bar. This was our daily sell was here. This was in the March contract, and then the very next day we had rollover to the May contract. This is the May contract here. But the March contract is actually not expired on rollover. It could have anything from 7 to 14 or 15 days still to go before expiry. So obviously you've got to be out of this trade before that contract ends. Otherwise you'll be forced into delivery, and you want to avoid that at all costs. But there's no immediate panic. If you're in the trade, you don't have to get out of it. You don't have to panic about it. You'll have a few days. So just make sure you understand that. Be aware when rollover's coming up, we don't put up new signals because the way our programs work with Trade Navigator, it works off the 057 chart. So if I was to put up a new signal 2 days before rollover and it was a T03, it ran it the day afterwards, the program that I've been showing you that sets out where to enter and put your stop would be telling you to use your entry and exit based on the 057 chart, the continuous contract, which is no longer right. Once the contract rolled, it needs to be replaced. But be aware of that, folks. Be aware when rollover is. Don't be frightened of it. There's some great opportunities of trading into and around rollover. Just make sure you know when the rollover is, and if you do want to hold the trade for a couple of days past rollover, you can, but you can't open a new position in what then becomes the old contract. Okay, so folks, I wanted to, thank you for bearing with us. Nobody's left, so you must have enjoyed this refresher. For any of you that are not already in the Danielcode, for goodness sakes, help yourselves to a free trial. Let me just run through how you do that. You're very welcome. There's no obligation. Here you are. You go to the Danielcode website. It'll look slightly different. You won't see all of these gold headings and stuff until you become a number, but you'll see this, the Danielcode free trial. Click on that. Register a username and password. Send the username to Terry. He will give you a 31-day free trial of everything on the website. Nobody will call you. Nobody will send you an email. There is no follow-up. It's up to you. We don't sell your emails to anyone. We don't involve ourselves in any of that grubby business. You will not be harassed and driven mad. We are not a sales organization. And then if you need any help with that, go to the Contact Us tab up here, and you will see DC Support and Membership. This is Terry, support@thedanielcode.com. There's his phone number. You can contact him on Skype. And if you want to talk to a broker about Danielcode trading or any other advice, you can talk to Jerry Winter. This is Jerry here, Jerry at fptrading.net. Jerry's been our supporting broker for many, many years. He's been to 3 or 4 tutorials himself. He's a great personal friend of mine. He's not a mad hustling guy. He's a very steady, very nice guy, personal friend of mine. Look forward always to spending time with Jerry when we're together in the US. So that's it. Good. Please, yes, Scott, go and get your trial, folks. If you'd like a free trial, it's free. Go. Cost you nothing. get started. You might find this is really great stuff for you. Okay, now what I wanted to do was talk about politics, the great corruption. And oh my goodness, we're going to run out of time, but we might have to leave that till next week because it's going to take me a lot longer than the time I've got, which is 0. But I mean, this is just what's happening in the American presidential election, particularly with the Republicans, is just incredible. I mean, I am not a political creature. I usually try to ignore elections as much as I can. Australians are very apathetic, so they should be. Our politicians are all lousy, the same as yours are in the States. They're just there to get elected, feather their own nest. They seem to go to Canberra with the backside out their pants, and 6 months later you see them in, $3,000 suits and women in Chanel dresses, and I mean, it's quite ridiculous the money we're paying these people and the rest of the money they're getting. And Chase says, Chase is telling me you don't have to hurry. Corruption is not going away anytime soon. Let's just deal with this while you're here. John Marlett, to understand we have access to DC Toolbox if we subscribe TO3 Plus signals. Yes, you do, John. If you're a subscriber of the TO3 Plus signals, you have access to the DC Toolbox. Email Terry at support the Danielcode. He will switch that on for you. Yes, Chase, quite right. It's not going away anytime soon. It's not just in America. It's the same everywhere. We've got an election coming up soon, and I'm really, a rational, sensible person would look at the American political situation, the British political situation, the Australian political system. I think you can pretty much take any of them and say, quite frankly, I despair. It is so corrupt. It is so self-serving. It is so convoluted and complex that it's terribly, terribly hard to get your head around everything that's happening. The media, the fourth estate are active players in this. I mean, you really get to the stage, we're just inundated with articles, as you are too, about what a dreadful man Trump is and how can this possibly be happening. I can tell you the very first Trump supporter was Mrs. Needham. The minute his name came up, and, no one really took it too seriously, but I can remember her saying to me, this is the only way you're ever going to get any real meaningful political change. You're going to have to get an outsider, a person with the strength of personality to overcome generations of inertia. Everyone's protecting their own corner. You've got a bloke like Paul Ryan slinging off at Trump because he's got himself in the position he wants to be. I mean, a more boring, grey, odious little man you couldn't find. But, he's become leader of the Republicans in the House. And he's a much applauded policy wonk. People don't care about policy anymore. It's all a lie. It doesn't happen the way it should. People just want to get a change for the sensible things that need to be done. Jobs, income, tax, security. These are the big issues. The media and the social wing of these parties are obsessed with the trivia. They want to talk about pro-life, anti-life, abortion clinics is the proper name for it. They are obsessed with the race battles. They are obsessed with being offended about any damn thing. There are farmers in Nevada obsessed whether they can graze their cattle on federal land without paying for it. I mean, you've only got to look at a newspaper. The headlines, the trivia is disgusting. And in the meantime, the rest of us, for all my life, where the hell do your taxes go? I mean, I saw Trump the other day say America's the highest tax country in the world. Forget it. Our tax rates here at 180,000, you hit 50%, 48% income tax, a 2% compulsory levy. That leaves you 50%, and of that 50%, you've got a 10% wholesale tax on all goods and services. Double it because you've only got 50% left. So it's effectively 20%. I had to buy my son a new car the other day. 25, and it was a Toyota, nice little car, about a 2012 model, $2,500 in sales tax, $1,500 in registration for the state of Queensland, $4,000 out the door in government charges. Gone, just gone. And then the registrations every year, another $1,500 for insurance. I mean, you know, the whole scene is just out of context. We, the people, and I don't care what country you're in, it's the same thing. Trump is shining a light because he's showing, and it doesn't matter whether you agree with the guy or not, but the media hate him. In Australia, of course, the media is much controlled by Rupert Murdoch News Corporation. He's got the Australian newspaper. He's got his news.com website. They can't say enough nasty things about Trump. Latest story today is some story he said, allegedly, it'll be another bit of BS. I could have slept with Princess Diana. I mean, they will do anything they can to smear the guy. I don't know whether he deserves it or not, and guess what? I don't care. He's the only one in any of our countries, and he's the hope for us as well as for you folks, that he will attack the whole system. You just need someone powerful enough, and boy, I wish him strength to his arm. The forces he's got against him, this entrenched political machine that have feather-bedded themselves for decades and indeed for generations, they're not going to go out without a fight to the death. This hasn't even started. If he does get elected, that's when the fight starts. These guys will kill for the, what's that awful expression, eat their own young, and they would. That's what this row's about. It's not that Trump's a particularly bad candidate. I don't think Jimmy Carter had any idea of foreign policy. No one worried much about that. He doesn't need the minutiae of all this policy wank. He needs to just attack the whole system and focus on the basics. That's what our politicians need to do. Jobs, getting down your tax take, spending taxpayers' dollars only where necessary, and then doing it responsibly. And it's not done. Politicians use the tax take to reward their supporters and their own families, and it is disgusting, and it is corrupt, and it's going on everywhere. Anyway, that's enough time for today. I have a lot more to say about that next time I have the chance with you. Let me deal with a couple of these things. Othmar, have a nice weekend. Thank you, mate. Jim Brown, can you recommend a good book for learning to trade options? I've traded stocks with buy stop, etc. It looks like DC is made for options. Jim, it's not. We do have people who trade options. I don't trade options because options are systemically mispriced. If you want to trade options, you should learn to be an options writer. Options are systemically mispriced, and that's why 96% of them expire out of the money. Just learn to trade futures, Jim. Come to El Segundo, about 15 minutes away from Los Angeles Airport, in May this year. It's not far away now, folks. It's February, 90 days virtually, 24th of May, El Segundo. Send me an email. I'll see you there. I'll teach you how to be a great trader. We've got Mike Mitsos with us here, who had been trading for a few years, many years, but he came to the Los Angeles tutorial last year, and he sent me an email which is on the forum. In the 5 months since he was at the tutorial, he made 20 times, yes, that's right, 20 times the fee. He knocked over 150,000 in the first 4 or 5 months after the tutorial. It will turbocharge your trading. Come along, Sue Lee. Thanks, much appreciated. Yes, political. Noses in the trough. Boy, yeah, go Donald. Well, you know, he's the only bloke who's not beholden to the system, Sue. That's why I'm with him. Pete Andrews, got on your mate. Nice little rant. That's only the start of the rant, Albert. If I wish I had an hour, I would go on and on. Bruce Windsor, yes, options are highly manipulated. They are systemically mispriced, Bruce. Writing options is where all the money is. Trading options, buying options, waste of time. Todd Long, do I have a TN platform to use? Yes, we do. The Trade Navigator platform uses all of the Danielcode tools. Todd, if you contact Terry at support, he will get you the Danielcode tools that interface with Trade Navigator. Jim, yeah, good. Hugh gets left. Sorry to lose you. Guys, next tutorial will be 2 weeks from now. Thanks. There's Tom Janovic, my friend in Florida, Tom. Boy, it's hotter here than it is in Florida today, I'll bet. 2 weeks' time, the next webinar, unless something really extraordinary happens in the meantime, and I will set aside a good half hour to let you know my feelings on these corrupt, rotten, lousy politicians all over the world. A pox on all of them, we would say. William Rogers, S&P, what have we got from Bill here? Countries driving interest rates negative. Won't that push up the Aussie dollar? No, Bill, the Australian Reserve Bank doesn't care what the rest of the world does. They're a law unto themselves. Australia is a net borrower of capital, so the Aussie bonds are always 2 or 3% above the rest of the world. Aussie bonds at the moment 2 to 2.25%, where the rest of the world is on half to zero. So it doesn't sound much, but to big players, that's a fortune. That's why the Aussie dollar is appreciating. What we need is eventually the Reserve Bank of Australia will realise that they've got real economic problems in this country. They will be forced to slash interest rates much more than they have now. They're down to 2.25%. They should be down another 4 basic points at least. But then they don't listen to me, do they? William Rogers, yes. S&P still a bear market even after this rally back in the channel. Let's have a look. That was its one way to avoid it. Remember, let's go and have a look at our 6-day chart. This is gold. Look at it. Boy, ran straight up to that 1269 number. Amazingly accurate, this stuff, isn't it? Just look at this gold rally here. Fantastic. Let's quickly grab the dollar SPX chart for you. And thank you for reminding me. Here we are. Okay. Let's have a look what we've actually got here. So here was our close outside 2 standard deviations. That's the signal. We have 2 options from here. We either have a big consolidation, maybe for 6, 8, 10, 11 months, or we have a rally and go down. At the moment, my bet is on rally and go down. It will roughly try to get back to this 1 standard deviation, which would be running around somewhere. You can see this is fairly rough, 2029 or so. And if we get a failure there, it's going to go down a lot more. I mean, I love bear markets. You know, I love volatility. That's what we want. That's the name of our game. It doesn't matter to us whether it's going up or going down, because we're nearly always on the right side of the trade, which is the key to it all. So that's it, folks. Thank you for being with us today. Send me an email if there's something you'd like me to deal with at our next webinar, or if you are a member and having any problems, shoot me an email or Terry. We're here to help you, and I thank you for your attendance with us today. I'm going to close this now, so bye-bye and enjoy your weekend.